Hey guys, TommyBryson here, and I've been getting a lot of comments asking me, Tommy, how do I start investing from zero to my first thousand, my first $100? How do I get started step by step, like a full-on tutorial? Okay, so for this video right here, my goal is to tell you guys exactly how to get started investing from step A all the way to step Z, and that way you know exactly what it takes. So I'm going to talk about how to get started, what you need to get started, how much money. By the way, you need $0 by the thumbnail. Obviously, you don't need any money whatsoever. And I'm also going to tell you all the steps and the amount of money you can expect to make either long-term or also short-term. So stick around to the video to find out exactly how to do this. And by the way, guys, I do upload videos on this channel every single day. So make sure to subscribe to the channel and hit the bell so you get notified every time I post a new video. And on top of that, also destroy the like button. And now the very first thing I want you to do, guys, is to build an emergency account. Now tell me, why would I do that? I just want to get started investing. The answer is I don't want you to go out there naked without any security and not know exactly what's going to happen in case you lose your job or in case you make a mistake and you actually lose money, because that's also possible when it comes to investing. I do not want you to be the guy to be out there having to give his blood away with like plasma, or to be the guy selling his kidney in the black market because he can't afford the guac at Chipotle anymore. Don't be that guy. So here is my recommendation for an emergency fund. What I want you to do is, if you have a lot of debt, I want you to save for at least 3 months worth of all of your expenses, and that way you're covered for 3 months in case you lose your job. However, if you don't have a lot of debt, I want you to save up for 6 months, okay? That is the goal. And for me, guys, I actually have my emergency account in my SoFi bank account, okay? Now, why do you have it here, Tommy? Is because I want to make sure I have a separate bank account to make sure everything is covered, and that way I'm good to go. Now, right here, I have around $12,000, $11 every single month, just in case everything happens to me for up to 6 months. And that way, guess what? If I lose my job or anything happens to me, I'm still good to go for 6 months, and that way I can figure out everything. There's nothing like security, and I know if anything happens, I can still go to Chipotle without having to sell my kidney and buy myself some guac, okay? I don't want to risk the guac, so there you go. Now, remember, okay, if you have a lot of debt, 3 months. If you don't have a lot of debt, 6 months. But you have to have one of these. I don't want you to go out there swimming naked. I'm being very, very serious, okay? Now, the second thing I want you to do is pay off your high interest debt. Everyone wants to basically go out there and just invest all their money and then worry about their debt, because the idea is, well, I'm going to make so much money that my investments are going to pay my debt off. But in reality, it is very hard to do that when it comes to investing in the stock market, and here's why. Because say, for example, guys, if you have a credit card, by the way, this is a debit card, but it's an example, you know. Say, for example, you have a credit card. The average interest rate might be from 18 to 35%. The average return in the stock market is between 7 to 12%, meaning that every single year you're going to be losing money because basically your credit card is charging you way too much money. So the answer is you want to basically take some of your income, a lot of your income if you can, and basically take all that extra money and pay off all your high interest debt. That includes your credit card debt, your car loan debt, and sometimes it might be a better idea just to get rid of the car and buy another car in cash, okay? Because a lot of people go out there and buy this fancy car they can't afford, then they're stuck with it with a very high premium, and you don't want to be in that position. So the best thing to do sometimes is just get rid of the car and get yourself a Camry and just call it a day, okay? That's my recommendation right there. However, Tommy, what about student loan debt? The answer is, if you want to, you can also take that one off, depending on how much interest your student loan charges you, okay? My student loans are around like 4%. In reality, I can make more money by investing that money, but if it was like 6% or 7%, I would probably just pay it off and be done with it and just call it a day. So there you go. Before you start investing, emergency account, and then also pay off all your high interest debt. And don't think I forgot, okay? Once you're done with your debt, okay, I want you to take 3 more months of emergencies and put it into your entire emergency fund, and this way you're covered for a total of 6 months and you're good to go, okay? That way you have your emergency accounts, you're debt free, and you're good to go 100%. By the way, this is a SoFi debit card. If you want the link to this bank right here, link down below. It's my bank. It's what I use, and I really like it. And when you sign up with my link, you also get 75 bucks. Just saying. And now, guys, number 3 is basically, well, Tommy, I got everything set up already. I have no debt. And on top of that, my emergency is covered. Well, what exactly do I have to do right now? Okay, how do I actually get started into the investing game? Well, there are 2 ways I'm going to discuss in this video right here. And the first one is passive investing. This way you invest your money. It makes you money without having you to actually do any real work. The second way is to go out there and actually pick and select stocks and take the risk and invest the correct way and also make a lot more money. But that takes also a lot of work. The first way I want to break down is basically, Tommy, how do I invest passively without having to actually go out there and analyze a ton of companies and actually put in a lot of work? The answer is very simple, guys, okay? I'm going to recommend two apps. Those two apps are basically Acorns Investing, that's what I currently use, and on top of that, also the SoFi Investing app. Now, why these two apps, guys? Because basically Acorns lets you invest with $5 into a portfolio of ETFs, and my favorite portfolio here is called Moderately Aggressive. When you sign up with my link down below, you'll know exactly what I'm talking about. Now, with SoFi, the reason I recommend them is basically because you can go out there and invest into ETFs also, but the idea is you can invest, for example, with fractional shares, and that way you're also good to go, and you don't really require to basically have a ton of money. But if you also want to invest into stocks, Amazon, Apple, whatever you want to invest into, you also have the option, and you can also buy a fraction of the company instead of the entire company, which is also awesome if you ask me. Now, here is a real life example if all you're doing is using, for example, Acorns, okay? The idea is if you're making after taxes around $40,000, around $3,330 every single month, the idea is if you invest 30% of that, okay? Because basically you live on 70% and you invest 30%. If you're doing that, you're going to be investing around $666.66 every single month. Now, after 40 years of investing, you're going to have around $3.2 million at a 7% interest rate and also at a 2.35% dividends, okay? The idea is that once you get to this level, your dividend payments will be like around $75K and you didn't really have to do anything whatsoever, okay? So by you using Acorns or, for example, SoFi to invest into ETFs, the idea is over the long run, all you have to do is invest into your portfolio step by step every single month. Now tell me, why 30%? The answer is I think most people out there should live on 70% of their income and invest the rest. Now, do not get me wrong. When I say invest, I basically mean, for example, if it's a college degree, you can do that if you want to. If it's, for example, real estate, you can do that if you want to. But again, this is a stock video, and that's why I'm talking about stocks here. But overall, guys, I also want you to grab some of this money and invest into making more money by getting a different career also, because I also recommend that everyone should have basically a job that gives them between $60,000 to $8,000, and if you don't have that job, you got to go out there and get yourself that job by investing some of your money into getting that degree or a certificate to basically go out there and basically grab that much money. Now, you don't need a PhD or master's or bachelor's to actually earn that much money, and that is a great thing, okay? So there you go. And now, guys, number 4 is going out there and actively picking stocks. Now, I'm going to get very complex very quickly here, and it's because it takes a lot of work to actually do this. And if you want to do this and you basically want to go out there and pick Apple or Tesla or whatever company you're interested into, it's going to take some work. Now, the first thing I have to tell you is this, guys, okay? If you guys don't know, in the US right now, there are around 2,800 public companies basically in the stock market. Now, if you were to try to analyze every single company correctly, you would never ever finish in this lifetime because it takes a lot of work. Now, the idea is, in this video, I want to focus on 11 different sectors of that industry of the stock market. Now, before I tell you guys these 11 different sectors in the stock market, I basically want to make sure you guys understand these 3 elements when it comes to investing, and that's all you really need to know whatsoever, okay? The first thing is, all you want to do is pick a sector, learn as much as possible about it, and analyze companies, and this will require some accounting skills. Number 2 is, you want to basically pick very good, solid companies that are undervalued and invest into them and buy at a discount and hold on for a very long time. And that's what the third thing is, basically just hold on throughout every single wave, and that way you'll be good to go. But I'm not telling you to stop analyzing them. You also have to analyze them over and over every now and then so you still believe that everything is going on and everything is okay. Now, when I say analyze a company, it goes way beyond numbers and balance sheets. It also goes beyond, for example, management, industries, and also economics, okay? That all plays into a part, and that's why this right here, picking stocks, is also so difficult. Now, if you want to learn how to do this, I recommend a book called The Intelligent Investor by Benjamin Graham. It's a great book. Link down below with Audible. You get 2 free books. Pick this one, and that way you learn exactly how to do it. However, if you're here and all you want to do is invest passively, I recommend another book about index funds, and that book is called The Little Book About Common Sense Investing by John C. Bogle. And also, since you get 2 free books with Audible, you might as well just get them both. Links down below. By the way, when it comes to trading stocks, I also recommend Robinhood. Link down below. When you sign up, you also get a free stocks. All the links for this video are down below, so check that out after the video. Now, here are 11 different sectors when it comes to the stock market that you might want to take a look at, and this way you know exactly what you want to get into. The very first one is materials. Companies that focus on getting raw materials and basically processing them and basically going out there and selling them or providing other companies with those materials also. That's an entire industry. If you want to get into that, you can also get into that. Number 2 is the industrial sector that basically makes aircraft, machinery, and also does a lot when it comes to transportation. Now, some examples for this right here are the Boeing Coal Company and also, for example, even GE, General Electric. By the way, all these sectors I got from an article linked down below. It was on US News by a guy named John. So if you want to skip this video right here, you want to go see it, then go see it. But in this video, I will give you guys extra examples that he didn't mention, and this way you get a broader understanding and also a lot more ideas when it comes to investing and what sector to actually pick. Number 3 is the financial sector, which includes, for example, banks, Visa, PayPal, and even Berkshire Hathaway. Companies that deal with financial stuff. By the way, although right now we have a lot of solid banks, in the past, a lot of banks have actually gone bankrupt. So also keep in mind that, and that's why it's so important, not just to be like, okay, so it's Chase, it'll never go bankrupt. The answer is you never know. So treat every single company the same and analyze them very, very well. Financial sector is very good. It also keeps growing every single year, so that's also a pretty good pick if you want to get into it. And now, guys, number 4 is actually the energy sector, which includes, for example, oil, solar, wind, whatever you can actually extract from the earth to actually produce energy for Americans and also the entire world. Now, before you say, Tommy, well, you know what, oil is not going to be needed like in a few years or so, remember this, okay? When you're investing for the very, very long run. So the idea is, do you think in your lifetime we'll stop using oil? The answer is probably going to be like, probably not, okay? We're still going to need this. So it might still be a good investment if you ask me. And now, guys, number 5 is actually the consumer discretionary industry when it comes to the stock market, which is something that actually take a big hit right now because of everything that's going on right now with the pandemic. And I mean, for example, Carnival Co. and a bunch of companies that basically deal with, hey, what can we offer consumers that they might actually want to buy even though they don't need it? And by this, I mean, for example, luxury goods, companies that provide products to people that they don't really need, but they usually want to spend once they have discretionary income to basically go out there and have some fun if they want to. And this company right now is down to the floor because basically everything is down because everything is going on right now. So if you want to get in now, the idea is overall, remember, you want to invest into companies that are undervalued. And once things go back to normal, because it's a wave of long term, you will make a lot of money also. So take a look at companies over there in that industry if you want to get into it also. Number 6 is the information technology business. And that includes, for example, Apple, Microsoft, and a lot of tech companies out there. But sometimes you can find companies that actually share both things at the same time and are in 2 industries instead of 1. For example, Tesla and also Amazon that are also in the tech industry, but they're not really tech companies that much, okay? So also keep that in mind. Now, number 7 is communication, which basically includes Verizon, T-Mobile, and surprisingly even Facebook and a few other companies, including AT&T. The answer is, as things keep getting bigger and bigger and bigger, you saw what happened with Sprint. T-Mobile bought Sprint. So the answer is, you want to analyze these companies and see exactly, are they undervalued or are they overvalued? And once you know that, you invest into them for the long, long, long run. That's the idea here. And number 8, guys, is real estate. And some companies might include, for example, Redfin, Zillow. A lot of companies out there that basically are in charge of distributing real estate, selling real estate, or, for example, even owning real estate. Now, a part of this industry that's actually down right now is basically the commercial sector, because basically no one or a lot of businesses out there can't really pay their rent or actually their lease. So the answer is this industry is down right now, but in reality, if you're buying in right now, you could probably basically get a discount and just hold in for a long time. But again, before you do that, learn how to analyze companies, and this way you're good to go. And again, I also recommended the book, and all the books links down below. Just sign up with Audible and you get 2 free books. And number 9, guys, is actually the healthcare industry that make medicine, or for example even manufacture medicine. And some companies are, for example, Johnson & Johnson, and usually these companies right here usually have a lot of pending lawsuits. So always keep that in mind when it comes to analyzing the companies and making sure you understand the true value of the companies. Okay, number 10 is consumer staples, things that people will forever need. For example, food, toilet paper, and we everyone needs toilet paper, especially right now because people buy a lot of toilet paper. Okay, but overall, guys, this might include, for example, BJ's, Costco, Target, Walmart, a lot of these companies, for example, even Amazon, that provide a lot of the goods for people that they will forever need throughout a recession or not a recession. They will always need these things to survive no matter what. And now, guys, number 11 and the last one is actually utilities. Okay, and utilities include, for example, electricity. And by the way, a lot of economists agree that basically when it comes to utilities in that sector, usually you have monopolies being built out very naturally, okay? Because basically utilities is a very global and also very broad market, but usually it comes down to one big company actually owning a lot more of the entire market share, okay? So always keep an eye out for those hey, what company is on the rise? Because especially now, guys, with everything going on right now, from energy shifting and we don't know exactly how we're going to be, solar and not solar in the next 40 years or whatever, you want to keep an eye open for those companies. But guys, overall, those are 11 different industries. Comment down below and let me know which industry do you want to focus on. And overall, remember, okay, what you want to do is basically go out there, analyze an entire industry, learn about the industry, okay? Buy companies in that industry that are undervalued and hold on for the long term. And that is basically all you have to do. The hardest part is to learn how to analyze companies, and that comes with accounting and also understanding the economy. So do not be afraid to take some courses, watch some YouTube videos on it, and that way you learn how to do it. And also read the book I recommended, The Intelligent Investor by Benjamin Graham. Is going to help you out a ton. And by the way, all the links down below, for example, to SoFi, also Robinhood, and also Acorns, and even, for example, Audible. That way you get all the links I included here. And if you sign up for everything, guys, you basically get free money, free stocks, and on top of that, you also get free books. So it's a perfect video if you ask me to get started. But comment down below and let me know, guys, which industry are you interested in. On top of that, did you pick passive investor or, for example, active investor? If you ask me, passive is the simplest way, and it's probably the best way possible, okay? Actively is very risky if you ask me, picking stocks and putting your money into it, okay? Just putting it out there, but it's very possible also you can actually become successful into it. I'm just saying, okay? But overall, guys, comment down below and let me know. And as always, if you enjoyed this video right here, well, like this video, subscribe to the channel, and hit the bell so you get notified. On top of that, follow me on Instagram, TommyBryson, and I also have a brand new channel called The Tommy Bryson Show. Link down below. It's hilarious. You're going to love it. And as always, if you want to watch another video, basically on my portfolio, how I'm investing, here it is right here. Okay, awesome video. Leave my picture. I'll see you guys tomorrow. Thanks for watching, and as always, peace.